Hey, what's going on, guys? It's Will. Hopefully, you're having a great day today. In this one, we're going to go over the top stocks for this week. Now, we do have the market closed tomorrow, so you want to watch out as we're going to see basically no volume, but we will have some upcoming picks potentially to be watching for this week that we want to go over today. So, a couple data center picks, a couple companies in the markets uh, of AI that would be worth watching right now. So we're going to jump into it. How are you guys doing? How's everyone? Feel free to let me know in the chat if you have any picks yourself. Feel free to drop any ticker symbols as well if you have any ticker symbols that you're watching as we gear up for this week. Go ahead, drop them down below in the chat, and we'll jump right in. Biggie, how are you doing? You got Coreweave. All right, Elvis says Coreweave. Biggie says Black Sky. Very cool, very cool. Okay, got some top picks there. Black Sky, Redwire. Okay, cool, cool. All right, so we were doing some analysis earlier on Rigetti today. We could jump in on Prophecy app. Let's go ahead and pull up Coreweave, CRWV, and while that's loading up, let's head on over to the markets. Once again, stock and option markets are closed. You could still queue orders, but US customers are only going to be investing in crypto or futures. President's Day tomorrow. So CCCX, Randy says, AR says, hey Will, how are you doing? Planet Labs, got it. El Coco Loco, what's up? Keeping your eyes on Redwire. All right. So we're starting off with Coreweave here. Going to go over to the AI markets. AI market is definitely seeing a lot of growth as of recently. One of the top markets to follow are the data center markets, the AI markets, the space tech markets, the defense markets are seeing a lot of growth right now. And definitely we have a focus on companies that are providing the infrastructure for top AI companies to be able to grow. And so some of the examples could be considered Coreweave, for example. So if we go over to data centers here, CRWV, it's going to be Coreweave. And we know some of the partners that are with Coreweave that are making it possible for Coreweave to grow as well, which how many of you guys have any picks there? Feel free to drop them in the chat as well. First things first, so CRWV. You see they've been having this overall uptrend here since their IPO. So recent IPO, they're up big time from their IPO at 33 bucks a share. They're around 95. But you do see them starting to pull back here. Again, we've kind of watched pretty closely as they've lost some of the momentum after IPO and haven't entered any short-term or long-term positions on the company because of the volatility. If you were to look at some of the trends, they've been very consistent. We got to see some very consistent trends through 2025, uptrending, uptrending. Once it crossed below here, see it swing below the moving average, get below that 200-day moving average, and then was selling down and selling down, and we saw it find support here for a moment around 100. Did make a run back to 155, but still continuing kind of this downtrend now. You see it selling down, selling down. Once again, made that very consistent uptrend through September 2025 into October, but then again couldn't sustain, pulled back below the moving average, and then was then held below that moving average until that support around 65. Now once again, just seeing that trend, so it's kind of consolidated, gotten back above that 200-day moving average. Currently, we see it at a resistance level immediately around $100 a share, trying to struggle a little bit to break back above 100, and the resistance after that's going to be around 105, 106. So, in the short term, there's some volatility to watch. I mean, there's not really too much to pay attention to on Coreweave from a technical perspective. I mean, you do see a little bit of a sharp kind of V-shaped pattern recovery to where maybe you get more of a breakout and a continuation. But that sharp decline here on Coreweave was kind of a value check. While they're one of the top companies in the data center markets that people are following, the earnings, they had around $50 billion or more than that, around $85 billion market cap at one point. they're doing 1.3 billion in revenue, but they're still not getting past the startup and operation costs, you could say, as they're holding below about $100 million there in negative net income. So while they're making 1.3 billion, they're still spending over 1.3 billion dollars and some. And while they've also increased their assets have grown up to 32 billion. They've tightly not had any change around their liabilities, as their liabilities have jumped just as much, and the actual equity is only around 3.8 billion. So they're heavily reliant right now on a lot of third-party companies. Like APLD is one of the companies they deploy that builds the data centers for them, Applied Digital. And while some of the contracts that they've seen get deployed in the data center markets, they build out data centers for companies like and bring the cloud compute with companies like Nvidia. So they bring the GPUs to the companies. They work with OpenAI, Google. They work with Cloudflare, and it's very common that you would see a company like this have high liabilities because they're doubling down on their growth. But as they're a top provider for OpenAI, Mistral AI, and IBM, and some others, it's still interesting to see that their valuation is where it is, $50 billion. They might even see some more pull downs and this continuation of their kind of downward pressure we've seen here over the last 6 months. It's possible they break out and continue, and that's what I'd watch if they break above about 105, 110. Now you're looking at targets for up to 170 potentially, but a lot more bullish. But currently, they're still kind of breaking down and potentially selling back down into that $35 to $50 range, which is not pretty, and that's why Coreweave is a little bit higher risk at the moment. There is that ability for a breakout, but once again, so much hype in the AI that you have the valuations get checked, really. The valuations getting checked. Not that there's a bubble, but that they are providing real world value. We see them providing that, and we see them obviously getting rewarded heavily with the amount of money they're making, but spending just as much, high liabilities, 3 billion in equity when their market cap's at 50 billion. It's looking a little bit tight. But let's take a look here. Over the next month, this is really interesting, actually. Let me just delete the financial widget and all that, and just take a look at this multi-model view. So we just added this into Prophecy AI recently. What's up, JZev? Will, how are you doing? Rocket Lab, we can take a look. Savor this, guys. Yo, I got a question. Do you think SpaceX will IPO? Will it hurt Rocket Lab? It would not hurt Rocket Lab. It'd most likely drive growth in Rocket Lab in the short term. But if it ends up tanking, then Rocket Lab's going to get hit. Steve, what's going on? Good evening, Steve. Hopefully that makes sense. Save this, guys. Peter, how are you doing? What do you think is a good entry point for long-term on SYM? All right, great questions. We'll get into it. So I'll keep it brief here on Coreweave. But basically what you need to know, as they are a top contender in the AI space, we recently added this really great view of the multi-model view on Coreweave. So I could actually see, what multiple models are projecting. Looks like you do have pretty mixed signals over the next month. Okay, let's check the next 3 month. They're leaning bullish with the exception of Gemini, a little bit bearish there. Take a look at the next 6 months. Yeah, once again, leaning bullish. Actually, over the next year, not even leaning very bullish. ChatGPT is bullish for sure, up 30% on the annual gains, and Claude is anticipating 18%. But you got Grok anticipating flat growth over the next year, and Gemini anticipating negative 18%. So, pretty mixed signals over the next year of just flat. When you look at all the models, which makes sense. Like I said, they're kind of overvalued when you look at them. Near term, also very mixed. Let's see. Yeah, again, very mixed because Coreweave is slightly riding speculation Not that they aren't providing value, but they are overvalued currently. From their IPO, they surged. You see them pop down from their IPO. They might pop down lower. So just watch that $100 resistance. All right. So next one we got here, Biggie's wanting to look at Black Sky. That's definitely one that we've been following. So BKSY is going to be over in the space tech market, not the quantum market. And BKSY is Black Sky. They are providing AI analytics for the governments and international agencies. And last they pulled down here, they haven't moved much since our last analyzation. Biggie, it looks like we have a very consistent uptrend with Black Sky. They've been holding above the 200-day moving average. You can see this trend very consistent. They recently pulled down the RSI MACD, now looking a little bit oversold, back down to that 200-day moving average. So Black Sky, if they do continue trend, having that ability to potentially continue back up into those ranges of around $35 a share, be potentially a 50 to 75% increase. They can continue that overall uptrend. So I'm liking Black Sky. I do hold the long-term positions on Black Sky. I'm very bullish on this company. In fact, while we've talked about Prophecy AI here, guys, and you guys know we're using the best AIs in the world to get these different projections from AI models, we've also been very bullish on the ability to utilize alternative data for stock analysis. So one of the top focuses that we're going to be having over the next year is actually integrating the ability to have a view from space down onto Earth of what's happening down in the ports and down in the, let's say, oil fields or different weather patterns, or in the minerals and the mines that are going on, because the minerals and the sources of the minerals are very helpful for investors to be able to see some of the activity, especially when we're able to even get some alternative data sources to track exactly what companies are there, what maybe ships are there, what are the operations, and all the data we can get there. To have the AI consider it and get you some better projections. Not that you have to, go through all that data, but I will say that Black Sky is super helpful for that. So Black Sky, they have the ability for us to get real-time data down on Earth, and we're very, I'm personally looking forward to using this inside of our own AI apps. And it's not cheap. It's tens of thousands of dollars per year. And I could tell you, as somebody that's looking to utilize real-time data for enhancing investor sentiment so that they can get information that they otherwise wouldn't have, there's a lot of value there, and that paying a company tens of thousands of dollars is quite worth it if you're working with potentially profits that are much greater than that, and helping a lot more investors do the same, right? So anybody inside of Prophecy app, which you guys know, if you ever want to tune on in, first link below, you can have a look there as we've started to roll out some new technology there. Would love for you to get the ability to use some of these cutting edge models. And they're normally hundreds of dollars a month, which would be over $1,000 a month. Some of our users are using all the models for a fraction of that right now, and getting access into some really groundbreaking technology that we've released recently. And we're working every day to make it better for you. And I'll tell you, the innovation that is happening in the AI market is not just that you have an AI company and you have an AI. That doesn't really matter. It's what type of data are you going to be giving the AIs so that it can make decisions and give you better information they would otherwise not be able to give you unless you had really great data. And so, it's something we take very serious at Prophecy AI for sure. So once again, let me know if you guys need any help there. We have some people there. I see Will is here. I see, is that Randy? We see some of our users that use it. They're here right now. Let me know how you guys are liking Prophecy AI. It's been super fun to innovate and work on it. It's really cool how we're getting to take what I normally do and automate it so that many people can use it. But when it comes to Black Sky, the reason I bring that up with Black Sky is because Black Sky is very much automating not just the AI, but they do the AI analysis of the uh, the satellite imagery, real-time satellite imagery of what's going down and what is happening here on Earth. And so they've been really good at it. You can see some of the innovation there, the different innovations they have track all of the things that are happening down on Earth, from flights to the cars, the people, the different innovations happening that we might not see. It's all available for you there. And so they got some big defense contracts as well as they continue to grow. Okay. And so their market cap's at just 700 million, but we've seen them secure some contracts recently that have been pretty large. Some of the notable contracts that we've seen them secure have been hundreds of millions of dollars in cumulative over the course of many years. They just signed a 7-figure deal that's a over $1 million. You have U.S. warship. They were even spotting some cool things happening over that the Chinese were doing, and they're like sharing real-time data. It's really cool. 7-figure and another 7-figure deal, and they've been growing super fast. So once again, the expansion contracts that they've been getting have been very, very consistent. Not so much in the hundreds of millions in one contract, but many millions of dollars through multi-year and multiple contracts. There's another $30 million multi-year contract there. And so they have some satellites up there. And so again, revenue pretty good. Their revenue is holding right now around 20 million a quarter, and their revenue is down year over year, but increasing, or down quarter over quarter, but up year over year. They have plenty of cash. Quarterly, they're growing to 380 million in assets. So with their current market cap of 750 million, I think it's fair to say that they could stabilize around these levels, but that if they continue some of the trend as they've had in this space tech market, that we could see Black Sky holding around $30 a share. So currently at 21, just to watch it, as we've covered it since $3 a share, and we have positions in the company. But I would say we're going to look for a trade, see if any opportunities present themselves this next week to potentially see a swing here of up to about 30 to 50%. All right, so how many of you guys have been searching for many different stocks, and then you find a stock that you think that you like, but you don't quite have enough time to go through it, and then you find another stock, and then you go into that stock, and you don't have quite enough time to go deep into an individual stock? So I remember when I was first starting investing, and the biggest struggle I had was like this watch list growth, that I just started building my watch list, and I didn't go deep enough in every stock, and I would trade different stocks, and I would say, what's actually going on with this stock? What's going on with this? Now we don't do that, right? We go deep, we make sure we really understand it. And the payoff when you actually understand what you're in it's been huge for me. It's what has led to 100 percentage point trades, just multiple of those types of trades per year. And it's not because I had something that's super special about me, or something that is crazy. I'm up till 2 a.m. studying the charts or anything like that, or studying the stocks. It's just because I had a system that I could repeatedly apply and not worry about if I was going deep enough, but knowing that what I was doing was deep enough, and I didn't have to pay attention to what people are telling me. Because, they will tell you online a lot. You're going to hear a lot of stuff, and you might even comment ticker symbols here, and you might be looking for my opinion. You might get a lot of opinions from people online, and that's totally fine. But what they tell you, the intentions that they might have really, really good intentions, right? They really just want to give you the best information. And that's why I'm here too. Like, I want to give you the best insights, the best information. But what is not aligned and isn't best for you is if the data isn't, the information that you're getting isn't of integrity. So you have to make sure, that the data that you're using, or the articles that you're looking at, are they're directly from the source. Okay, so I'm going to go into this next stock here. We're going to look at Redwire, and I just want to keep that. I want you guys to keep that in mind, because I get a lot of people that are saying the hype. Oh, the hype of this, the hype of that. And I'm like, it's okay to be excited, but just take a moment and really look at the source of the information, because there's fake stuff and you end up losing money. And it's like, I don't want to see anybody lose money, right? Okay. So, first here, we got Redwire. So I recently went to a conference. I got to go see and meet some of the executives at Redwire. And I got to meet with the people that run this company. And I'll tell you, the number one thing that I noticed is that this was back in 2025 in April. And I noticed that they had just signed some very large contracts. It was the largest contract they ever came out with. It was a $2.7 billion deal. Now, at the time, what was concerning about that was they came out with this $2.7 billion deal, and we were saying, how much of this $2.7 billion are they going to secure? And they didn't tell us. But I trusted that they were going to get a large portion of this. Now, they ended up signing multiple deals as the year went on, and they ended up coming out with financials that were super favorable. In fact, they came in with $100 million in revenue and increased their revenue by 50%. So they did $100 million. Now, $100 million in revenue, and they got their equity up to over $1 billion. So they have over $1 billion in equity, 1.4 billion in assets, plus 100 million. So what I learned when I got to go meet them, it was like a happy hour, and I don't drink alcohol, but I was just maybe having a Sprite or something. And I mean, every once in a while I might have like a sip or something, but it's never to get drunk or anything, right? But I'm there and I'm meeting with some of their executives, and I was kind of nervous. I was like, I don't know if I want to talk to these guys, because like I could ask them something and they'd be like, oh man, that's so surface level. Like, I don't even know. I could probably look it up on their website. But I asked them, what are their partners that they work with that have the most innovative technologies that they are producing? Right? I said, I didn't say that. That's a mouthful. I said something like, where are you guys making the most money from partners, or where are you providing the most value to your partners? Something like that, I said. And what they said was, and they do have a partner with BBAI, actually, Joseph, I don't know if you know that, Redwire. But they said Air Force Research Laboratory was a company that they were providing a lot of value. So I went over, I talked with Air Force Research Laboratory, and they were really impressed with Redwire. They said Redwire was providing them with technology that's like way better than other space companies. Other space companies are doing stuff that's like 10 years already proved to not be that good, like LiDAR, whereas Redwire is like got these really amazing sensors and quantum sensors that can, have way better sensing of what's going on in space, whereas LiDAR bounces off everything. It's not accurate, all these things. I thought, okay, that's really cool. And he was excited. It was like, yeah, he really wanted to talk about what Redwire does. And I said, okay, well, this is interesting. So I really looked at them, and after looking at their contracts, I thought they were a good company. So I entered on the long term, and I have some long-term positions from around $4 or $5 a share. And when we saw them launch from that $4 to $5 up to $26, I knew they were overvalued, but I still have Redwire. And so they've gone from 26 all the way back to 487. At this moment, when they're pulling down, they're seeing this downward pressure cross back below the 200-day moving average. They're at this support level around 770. the question is, are they looking to stabilize above $10 to $15 a share? And if you look at their market cap and you look at their current revenues, I would say yes. If you look at their news, this is where the hype comes in, right? The hype, which is actually not, that's actually true. They signed a $151 billion contract for the Golden Dome, which is, again, I mean, that's literally 100 times their current market cap, but they're not going to get that whole contract. They're just going to get pieces of it. So, but if you look at those things, you say, well, there's a lot of things working in the favor of Redwire for them to continue to run up. And so the thing that's pushing them down right now, there's two things. Number one, you got the technicals working against them. They recently had a break below the 200-day moving average. This is a constant battle. If you see a cross below the 200-day moving average and they're holding below the EMA like they are now, it takes more to get back up than it does for them to, let's say, continue a trend above those levels. They tried to hold it, they couldn't, and we see them break down. So right now, from a technical perspective, it doesn't look good. They got a support level here around $8 a share. They're currently at $8 a share. All right. But they have seen as low as $4.87. So technicals don't look good. They may bounce here, and then we see them get back up into levels that are favorable around $8. So from $8 back up into that $10 to $15 range. That's great. That's a 40% to potentially 75% trade. And I love that. However, the second thing that's working against Redwire right now is the defense uncertainty. You have a lot of defense contracts being reassessed after the potential extended government shutdown for the Homeland Security. And then you have Palantir have a very rough time over the last few weeks. And you have a lot of defense companies correct back down after having some great unprecedented bullish momentum. And so they didn't catch all of that bullish momentum. While a lot of stocks were selling down, they were still kind of selling down. Then they crushed their earnings, $100 million. They got to make some of the rally, but ultimately they're still under $10 a share. They're kind of beat down right now. So those are the two things that are working against them, a technical and a macro, a technical downtrend and a macro downtrend for defense that's kind of hitting Redwire. But from a financial perspective, for any long-term investors that are looking at Redwire, this company has the financials to stabilize or be valued at between $10 to $20 a share. And on the conservative side, from where we're at now, that's about a 25% to potentially 100% increase. So they are, just from a valuation standpoint, I should get my Warren Buffett or my Benjamin Graham book out so I can talk to you about some of the formulas. But I'll just tell you, like, their market cap's very low, their equity is very high, they have plenty of cash, and their revenue last quarter was really good. It was actually comparable to Rocket Lab, which is like 5, 10, 20 times more the market cap. So that's how it looks. So I like that. But once again, not enter any short-term positions till we get more confirmation around that $8 price point as a support. Hopefully that makes sense. Now the next one we got here is going to be, see, Braden is here. Braden, how you doing? Hey Will, hope all is well. What's your thoughts on NVTS? I'm super confident in what they provide and the potential upside that could come with the tech run. What part of what you're looking at with NVTS makes you super confident, and you're confident in what they provide, okay? And what makes you confident that they provide something of value? Can you send me that before we get there? Michael, Redwire is under pressure, shares pulling back. Major shareholders unload. Yep. Cool. Thank you. All right, so we got some other ticker symbols. All right, so the next one we had here was Randy. looking at CCCX. And Randy, um, Randy, are you using Prophecy? Let me actually search up Redwire real quick before we move on. Just don't need to do anything crazy. I was just looking to see some of the projections. Some of the projections negative in the next month on Redwire. So Redwire's got some near-term pressure. Just want to see how it looks over the next 3 to 6 months on Redwire. How does it look on the next 3 to 6 months maybe here? Give it a second as it loads up. Speaking of which, inside of Prophecy, we just added communities. So if you want to get our daily live trading sessions, you can actually go in the Prophecy app, go to the communities, and it'll take you over to StockMeet. If you haven't gotten into StockMeet yet, you want to tune on into our daily live trading sessions. It's the second link in the description below. Okay, so some of the projections right now as we load up everything for Redwire, over the next month, they're a little bit bearish. All right, so seeing some bearishness. We get into the next six. Okay, there we go. Cleans up a little bit. Into the next 6 months, we're looking bullish. Yep. All right, so Grok is pretty bullish there. How's Claude? Claude is pretty bullish as well. Okay, and then looks like Gemini is really bullish as well. Gemini is anticipating Redwire in the next 6 months to jump 15%. So across the board, 6 months looks good. It's in that next week to that next month that things are a little shaky. There you do see a little bit of variance though, where you have some a little more bullish, a little more bearish in the next month. But into the next 6 months, things are looking more bullish. Wow, look at that. And into the next year, Gemini has Redwire well into the $10 range. So good for them. Yeah, interesting. Okay. So the next one is that CCCX. So that's going to be CCCX is a quantum company. So you know how when you are watching one company and then the next day it's a different company? Have you guys ever been there? Because I remember when I saw my first merger or my first change. I think it was like it was like CRISPR Therapeutics. It was notorious. This is when I first got in. I didn't really understand, and you know how you're trying to figure out things and you like gravitate towards the wrong group. That was me going, like, I gravitated towards some of the pump and dumps about 12 years ago when I started investing, and I didn't really understand it. And they were like changing their name, and there was companies that would go from this name to the next name. I was like, okay, this is weird. And so, however, there are certain instances where that gets a bad rap, and the name change might not be too bad. Sometimes a company's at a struggle, and then they get acquired because it's easier to acquire a company that's already public, change the name, than it would be to go take your company and fully go public. Does that make sense? And there might be other companies that are like, I'm about ready. So what happened was this quantum company called Inflection recently acquired a company called CCCX. So let me get a refresh. Ooh, is it not going to let me refresh? Maybe their ticker symbol is now live. Oh, it's not live yet. Let's see, Inflection. Ooh, it's not live. Let's see. Come on. Uh-oh. It's not going to let me view this company because they're in the process of flippy flopping out to a different company. So basically you have this new merger, SPAC merger, where companies are getting acquired, and I can't pull up the chart right now. Let me see if I can pull it up on Google. There it is. Churchill Capital Corp getting acquired, right? SPAC deal, not acquired, but it's a $550 million as a SPAC. Redemption stay low in a quantum computing company. There you go. The name converted 3 days ago, and as the name's converted, it's like not even showing up the data. Let me see. Is it over in? Let me see if I could pull it up in Prophecy. Hey, we have it in Prophecy. Robinhood's not working, man. Let's go, Robinhood. Get it on. So quarterly, you see they were negative. None of these financials matter. The balance sheet is also not pretty. They had more liabilities than assets. That's why they're going to the SPAC deal, why you have a new company coming in. It's no longer going to be known as Churchill Capital Corp. It's going to be known as the Quantum Company. So this is a company called Inflection. Okay, I actually got to speak with some people at Inflection over in New Mexico when I was out there. I was born in New Mexico. I don't know if you guys know that. I grew up in California, moved around, lived in Boulder, lived in Florida, but anyway, went to New Mexico for a conference and also to visit my Gaga. So that was good, my wife. And we found a conference. It was really good. It was Inflection was there. Got to see some of their partners. They work with NVIDIA, U.S. Army, Navy, NASA. They work with JP Morgan. That was really interesting. The quantum usage in JP Morgan got me really inspired. We actually added quantum analysis with some of the quantum companies into Prophecy AI, which is really cool. I could actually use it right if I want, which I'll use it. Don't want to get sidetracked. Bay Systems is another partner, and they also work with Dirac, LG Electronics, okay? And they have quantum computing, neutral atom computing. They are seen as legitimate, you could say, compared to other companies that NVIDIA decides not to recognize, like QBTS. Algorithms, optimization, and simulation. Okay, and how they've positioned themselves. They primarily work in national security, space and frontier, so quantum technologies to strengthen defense, enhance intelligence across the land, sea, air, and space. Life sciences and drug discovery, that's a big one. So binding peptide proteins, there's 1 billion possible solutions. Quantum computers can find them faster. And if you find them, you potentially have vaccines or cures for diseases. That's a big one. Material science, obviously very big R&D for quantum. But their chart is messy. Their financials are messy. They're going to be highly volatile. But as you could tell, they surged big time, 15% last week. They're up to $13 a share. They've sold down and been beaten down from about $25 a share down to $11 a share. They're currently at $13. And so they are a quantum company that has still got to report earnings. We still got to see their market caps at $710 million. If their financials are what they say they are, and they become public, and things continue to line up from a financial perspective, then potentially this could be a $1.5 billion company. They could run up, especially if there's some other wind at their back from a quantum rally potentially. So those are things to consider. Oh, Louisville, Colorado. I used to live literally in Louisville, Colorado. I used to have the exact same zip code. That's funny. And so the projections, though, let's take a look at the projections from Prophecy AI. We got a few. Let's see how it's looking. Let me go just on OpenAI here. Solo out on OpenAI. ChatGPT, a little bit bullish, bearish into the next week. Pretty flat, pretty mixed. Bullish into the next 6 months to a year. So technicals are working for them. Can't really see them, but technicals are working for Inflection. So as they become a real stock, this quantum company Inflection. And as they are providing value, we'll see how their financials come out. Hey, let's keep a close eye on CCCX. Yeah, I don't have any other. I wish I could go in depth, but once again, like the charts aren't even working because they just had the name change. So I can't really get a full technical analysis right now. I could probably figure it out, but it won't do you much good because there's so much uncertainty after a SPAC deal. They might jump from 11 to 20 or something. That's possible, but they also could, who knows, price it. This is a repricing time. So let's see where they reprice in at. Okay. PayPal. Man, PayPal, a little bit disappointing recently, JZev. PayPal. I've had some differences with PayPal recently. You know, they kind of shut down their whole business side of PayPal. I don't know what happened there. And then a lot of people having trouble, like issues, glitches with PayPal. They're okay though. They're good. I've had some issues with them lately. And I did some research, and apparently their tech stack has been really struggling lately. But as you can see, PayPal has been seeing some corrections. They've sold down big time, and they've been really getting beat down over the last few years. Look at that digression. Yeah, you know what's going on with PayPal and why they're having so much of an issue, is because they're kind of consumer, but they're primarily consumer. But then they tried to pivot heavy to business, and then they kind of abandoned the businesses. Like they made it so you can have your own link and stuff. And I was a business using PayPal. It was really good. And then they kind of abandoned, like they deleted the apps and like it's all in one app now. And then there's not business analytics, and they kind of went back to consumer. That really shook a lot of people trying to use PayPal as a business, at least me and other people. I'd like to speak from experience, at least using companies, but it's good to see other perspectives. So let me know what you guys think about PayPal. But yeah, they've had some declines. And if you really looked at their financials, take a look at their financials now. 37 billion annually. Income statement has been fine. They're still growing 4% year over year. But if you were to look at their cash from year over year, they're down about 5% on their cash, and their liabilities have gone up more than their assets over the last year. So they're really not in a growth stage right now. It kind of makes sense they've pulled down quite a bit. But they've pulled down so far. They're so far that they're at an all-time low, really, since where they were back in 2015. So maybe they do see a recovery just on that alone. The RSI, the MACD, way oversold. Everything's oversold. Their current market cap is at 37 billion, and they are making about 33 billion a quarter with 20 billion in equity. I'd say they're undervalued, actually. I wonder if they're going to just get acquired by something. But yeah, they actually do look undervalued from a financial perspective, but from a business health perspective, it kind of makes sense, I guess, why they're undervalued. So yeah, no technicals to work with them, but yeah, they look oversold for sure. Yeah, it's an Aussie company. Okay, you got a new company there. Okay. Adam, thanks for sharing. All right, so next one I want to go into here with you all. We got Rocket Lab. Okay, Rocket Lab is a space tech company. Very, very good for the long term. They got a huge wind at their back. They surged up to almost $100 a share. They pulled down pretty aggressively. The reality is for Rocket Lab is very high risk. Well, we've talked about this, but very high risk in the near term. Let's actually pull them up over in Prophecy. I want to get the analysis running, get that hot, because one of the things to note about Rocket Lab, end-to-end space company, they're building all of their technology, including even their solar cells on their stuff. They're building their own semiconductors as well, but their market cap usually stays around 1/10 of that of SpaceX, as they're a top competitor. And they've kind of surged up to 155 million. But as their revenue's grown, negative net income still. They're up to 10 billion or 2 billion, excuse me, with around 1 million in liabilities. So they're still, from a financial perspective, looking overvalued. From a value to the world type of perspective, company perspective, they are undervalued in the long term. But in the short term, they might sell down even as low as $40 a share. It's quite possible. It is quite possible. And the reason why is because of the pricing in. They're at a premium, and I like the company. I hold the company long term. I actually have some positions. I have a friend that works at Rocket Lab. His name's Ben, and I've heard from him quite often that he says to keep buying Rocket Lab. So any dips long term like this, you're probably saying, yeah, let's buy some more. But it kind of depends on your strategy, because if you're doing a short term trade, you probably don't want to trade Rocket Lab until you get a little more of a confirmation. It's kind of selling down, aggressive sell down right now. No indication of a reversal. Seeing it get beat down, holding below that 200-day moving average, potentially selling down further. A little risky at the moment. But when you look at what they're doing fundamentally, launching rockets and allowing smaller companies to get their space satellites up into space, it's pretty cool, but it's a really sexy brand. It's like, I'm investing in rocket ships. But then you got to look at the financials, and you're like, okay, well, financials are pretty overvalued, pretty premium. Maybe not the best deal from that perspective. But from this is really kick ass. I'd like to invest in a company that's in a booming like frontier, and it's going to be good 5-10 years from now, and they're doing it great, and they're a space company, and they're competing with SpaceX, and this could be a moonshot type of investment over the next 5-10 years. Once again, yeah, I love it. That's why I hold Rocket Lab. But again, I don't touch it much. We've been holding it for a very long time, and I just watch it. I watch it swing. I watch it go up and down. And when looking at it in the short term, I wouldn't trade it right now. I would not trade it, just because of the direction. So oftentimes when it's bullish, it's going to be holding above the moving average here. See, right now it's bearish, kind of getting rejected by the moving average. According to Prophecy AI, let's see maybe what's going on with Prophecy. Yeah, a couple things to watch here. So we were just pulled up on Rocket Lab. Let me pull that up again. Here we are. So some of the projections, like 6-month projections, very bullish. Once again, 1-year projections anticipating getting back up into $80 to $90 a share. Pretty mixed and a little bearish on the near term. You could see into the next month or so, pretty bearish. Even some anticipating that they sell down around 60, so over 10% from here. So pretty mixed signals in the near term, but for the most part, in the long term, looking very bullish and anticipating some growth from all the models. Yeah, so that's how that looks. Ben, what's going on, Ben? Jerica, how are you doing today? Braden. All right, so Braden, let's see what Braden has to say. Here we go. Confident in Navitas mainly because they make their semiconductors out of gallium nitride and silicon carbide, making them 3 times smaller and 40 times more energy efficient. More energy efficient than what? Braden, they've also partnered with NVIDIA for 800V AI data center archetypes or architectures. Just looking at where the company's at right now, I think they can be in the front line of the energy problem for tech. Okay, got you. All right, thank you for the breakdown. So when it comes to Navitas, the financials have been lagging for a while, but let's see if they've maybe come in with some better financials. Navitas has their focus on semiconductors for new technology, and doing semiconductors is a very, very hard business. So they are not only creating semiconductors, but they're designing them for others as well. And their financials, NVTS, Market cap's at 1.9 billion. They're doing about 10 million a quarter in revenue, and they're losing 19 million. So currently, just looking at the revenue, they're definitely overvalued. But when you look at their balance sheet, they got about $430 million, and that's a good amount of capital. So they're definitely building the capital. And when we look at their charts, NVTS, kind of gearing up there with the capital, how does it look? The last year, I've been definitely seeing this one on my radar since like 2024. People talking about it. Yeah, they've grown quite a bit. Yeah, I see what we're looking at here. Kind of like this trend, potential spike up there. Kind of hard to see. Yeah, maybe a resistance here. Yeah, so you got support maybe. Resistance, kind of holding above this 200-day moving average here. The exception of that big spike they had earlier. Kind of got this trend going. Holding above the 200-day moving average, so still indicating some bullish momentum in that semiconductor market there, Braden. The margin for profit, if you were looking on a shorter term trade, and I don't know if you're long-term, short-term, you are looking at about a 30 to 40% gain up to a $10 to $11 price point. It's pretty bullish, up to 11 bucks. Now, the risk management would probably be pretty close to where you're at right now. I mean, 200-day moving average is right around 770. It's currently at 835. So probably any break below that 200-day moving average, you're looking at bearish momentum, because the only thing that's keeping it bullish right now, from what I can tell, let's pull it up inside of Prophecy as well. And let me actually, let me get a new panel going. I want to see what's going on with the insiders. Let's see the top transactors here on Navitas. And let's also get the nearest support and resistance as well. Okay. Yeah, $8 a share, nearest support level. Okay, Vanguard, institutions, you got some buying and selling happening. Vanguard has been buying. Kinzer, BlackRock, Bank of America, Citadel. All right, insiders. That's the buys. What do the buys look like? Buys, some more buys. The sells, not too heavy actually. Buys. Okay. Yeah, it looks like you got Citadel buying in. You got 61% ownership. Yeah, they're definitely having some surges. Yeah, NVTS is still undervalued from where they're going, but to where they're at right now, they are a little bit overvalued. Like, that's why they would continue to rally, is because people look at them and say, this looks really great for the next year. And then they're going to surge a lot. It's really good when you're in that situation, you're on the right side of it. But if you're not on the right side of it and it makes that move, or it, let's say, breaks back below that 200-day moving average, then it's really frustrating. And you don't want to get into that position. So if you're in a short-term trade, I would probably watch right here around 750. Right? 750. If it breaks below 750, then you're breaking below the 200-day moving average. You're now kind of seeing the downward direction. If you hold above that 750 and above $8 a share, then you're looking more bullish, potentially recovering back up into that $10 to $11 range. Yeah, so it looks pretty good if they hold above 8. But if their technical direction shifts, it's not looking too good for them. So I would watch the $8 support, 750 maybe, but really $8 for NVTS. They hold there, and they do have that margin for profit. Once again, I mean, they might be one we actually see if an opportunity presents itself at market open tomorrow morning, and potentially we'll be trading it tomorrow morning if it does present itself. Be watching there as well. Great. Appreciate you all. Thanks so much for tuning in. If I earned your thumbs up, hit the like button. If you would like to ever tune on into those daily live sessions, it's going to be the second link in the description down below. We'll be there live tomorrow morning at market open, 6:30 a.m. Pacific Standard Time. You get an email just 15 minutes before that in your email inbox. It's not here on YouTube. It's actually on a private link you get in your email. If you want to tune on in, we do have that space offer still available. It's a space offer that you get where you get a free t-shirt still when you tune on in. You get lifetime access to our daily live trading. It's a huge sale. It's not getting any better than this. So go have a look simply in the second link below. And once again, if you guys want to have a look at Prophecy AI with all the software we went into today and how we're getting the projections that we oftentimes follow and use alongside our trading and investing with the different AI models, the best AI models in the world, paired with how I do analysis and some institutional grade analysis that you can automate and have a much faster analysis, then have a look at the first link below. If you do end up getting Prophecy AI, it's a full year license, then you get our lifetime access to Stockmates, our daily live trading sessions I just mentioned, for free as a bonus. So go have a look there if you haven't already in the first link below. And yeah, it's going to be Tuesday morning. We're there. It is early, so you can sleep in tomorrow. But if you want to be there at market open early on the Pacific coast, I should say, on Tuesday, we'll be there. Again, in the second link in the description for StockMe. Thanks so much for watching, guys. Appreciate you all. I hope you have a great rest of your Sunday night, and I'll see you in the next one. Take care.